does it matter which unit I sold? This is the most common complaint I hear from non-finance people. If I sell a screw and I have 1,000,000 screws, why do I have to track which specific batch that screw came from? It's metal. It's all the same. The accountants act like using the wrong cost formula is a moral failing. And don't even get me started on the Americans using last in, first out. Why is that banned under IFRS? Because apparently the Standards Board thinks they are the morality police of inventory flow. Imagine a nightclub queue. First in, first out. The people who have been waiting in the rain the longest get in first. This is fair. This is logical. The queue moves naturally. Last in, first out. The bouncer ignores the people who have been waiting for 3 hours and lets in the guy who just walked up to the rope. The people at the back of the line eventually die of old age. IFRS bans last in, first out because it allows you to manipulate your taxes by claiming you sold the most expensive, newest stuff first while hoarding the cheap old stuff to make your assets look artificially low or high depending on inflation. It is basically accounting gaslighting. Under IAS 2, you generally have 2 choices for items that are not unique. First in, first out. You assume the oldest inventory is sold first. In an inflationary environment, which it always is, this means your cost of goods sold is lower, so your profit looks higher. Weighted average cost. You throw everything into a blender and calculate an average price. Why the ban on last in, first out? Because if you use last in, first out, your balance sheet shows inventory values from 1970, which is useless for investors. IAS 2 demands that the inventory number on your balance sheet reflects current costs, or at least recent ones. Consistency is the only thing that saves you from an audit inquiry. Pick a method and stick to it like a bad marriage. You cannot switch back and forth just to make your earnings per share look fascinating for the quarterly call.